And news just in is that the Monetary Policy Committee of the Central Bank has reduced policy rates by 100 basis points to 17%, concluding its review on the economy. The MPC, at its last meeting in March 2018, reduced the policy rate by 200 basis points. The figure dropped from 20 to 18%. The governor of the Bank of Ghana, Dr. Ernest Addison, at the recent MPC meeting with the media, attributed the decision to reduce the rate to the central bank's move to achieve the annual inflation target. According to him, the Monetary Policy Committee decided to reduce the policy rate to also help ease the burden of interest payments on the budget. The policy rate is also expected to influence the lending rates of commercial banks. Well, news just in is that the MPC, that's the Monetary Policy Committee of the Central Bank, has reduced policy rates by 100 basis points to 17%, concluding its review on the economy. The MPC, at its last meeting in March 2018, reduced the policy rate by 200 basis points. The figure dropped from 20 to 18%. So joining me on the phone lines right now is Lord Mensah, who is an economist, to give us a bit of background to this news just in of the central bank reducing the policy rate to 17%. Good afternoon to you, Mr. Mensah.
Yeah, good afternoon, Madam, and good afternoon. So
what do you make of this reduction from 20 to 18 to 17?
Well, you know, monetary policy in itself, we have two ways of looking at it. As we speak now, the continuous reduction is an expansionary approach, and more or less it's a way of ensuring that, you know, this rate fits into all other interest rates to ensure that we can have a lower interest rate in our economy. So more or less we can easily have access to funds. But then the continuous reduction over the years, I can tell you for a fact that the response, as we expected, is a bit slow. We are looking at the thresholds that this response will trigger, you know, a way of reduction in interest rate across the banks, as we see. But hopefully, as we speak now, you know, the central bank has introduced a new base rate, which will feed into interest rate, for which the monetary policy rate plays a strong role. The claim is that this formula is market-oriented. So therefore, if treasury bill rate is coming down and then the monetary policy rate is coming down, we're going to realize there's reduction in the base rate. Therefore, all lending to private sector and at the same time individuals, will have lower interest rate. So for me, I think over the years there has been reduction, but then the response was a bit slow. Hopefully this time this reduction will reflect on the market so that
Dr.
myself and you can easily have access to lower funds.
How do we ensure, you're raising concerns about the fact that usually it doesn't reflect. How do we ensure that it does reflect at the commercial banks?
That is why the central bank had to restructure the base rate that the central banks use in calculating loans for individuals. So as you can see, the new rate that the new base rate computation, we call it Ghana reference rate, has the monetary policy rate as a component, and at the same time it has treasury bill as a component. So therefore we're going to realize a direct impact rather than those times when the base rate was being computed using bank specific variables. But this time I presume that as the monetary policy rate is coming down, there will be a direct impact because the new formula is more market oriented, which takes into consideration direct impact of the monetary policy signals.
Dr. Lord Mensah, thank you very much. Dr. Lord Mensah is an economist. You're watching Midday Live on TV3.